Key thing to recognize is March was great. January was weak. Outright weak, the country kind of in that shutdown. March was full bore, continuing. That's what matters, not what happened this quarter, but what was happening, what's going to happen subsequent quarters. Could be an opportunity. Stock was down 4. No Marcus retail moved the needle yet. That's not going to be a 2019 initiative, but they're doing a lot, I would say, to make it so that they're leaner. They bought back stock, and then I think that one of the things about Malaysia that people are so worried about, I think we're going to try to get that down to some level that is a little more, let's say, a little less fierce, right, so to speak. So I liked it. Is it the blowout that J.P. Morgan had? No one has had. J.P. Morgan was double-digit everything. But I thought the Goldman number was fine.
You thought it was fine?
Yes.
So is the stock not justified or investors not justified in selling it a bit, looking down? Not much, but a few points?
Well, I think their book is pretty clear. Tangible book, their core book is 210. Tangible is below that,
and a return on tangible equity of over 11%.
Yeah,
right?
I mean that's not bad.
11.7%. Yeah,
it's just an inexpensive stock for gold. Look, the idea that it's inexpensive for Goldman Sachs, all these stocks have been very cheap. But I would say I kind of like this book value is real. It does seem to be cheap versus book, and March being great is kind of that's the delta that people are looking for. And that won't come up yet. People will be talking about that.
Add them to the list of banks that have changed their format for their earnings releases, by the way. Got a nice pie chart now.
Well,
I assume Marcus and that stuff will start showing up here somewhere.
That's my point. I think it's $3 billion.
Yet.
It could be $3 billion in, I don't know.
Financial advisor,
18 months, 2 years.
Right.
So that's something that, that shows up in the mosaic. Look, I think it's fine. I think that the book value supports it. I think that the dividend boost was good, and I think the most important thing is March was great.
Yeah, expenses down helps.
Yes.
Credit provisions up year on year, specifically at Goldman related to the consumer loan portfolio.
Right, which is surprising. It's so small. They don't have that big balance sheet. They are lean. They are not having great expense growth anymore.
No. Their effective tax rate, 17.2%. It's not too bad either.
Pretty low.
Boy, I'd take that.
Wouldn't you?
I'd take twice that.
Yeah, maybe 3 times.
Almost 3 times.
Yeah, right?
Yeah.
But look, am I biased to like the quarter? I am biased to like the idea that book value is clean. And look, if you were to listen to J.P. Morgan, what really caught people by surprise was how great March was. I think that every bit as good as March was for J.P. Morgan, it will be for Goldman. And when people look at that, they'll say, listen, I'm doing rearview mirror. I'm looking too much at January.
Well, Wells on Friday said that the mortgage business was looking better, too. That didn't help it avoid 4 downgrades today on that net interest margin guidance.
Well, that conference call was just kind of a bomb drop when they said, listen, we're really going to have bad net interest margin for not interest margin, net interest income for the rest of the year. That's not a Goldman call. I don't know. I don't think anyone expected Goldman to be blowout because after J.P. Morgan, it was impossible. No one could blow out. And J.P. Morgan was like, what a bar. But down 4, up 4 Friday, down 4. Maybe they send someone downgrades. I don't think they do.